but let's focus on the FMCG pack. Yesterday at HUL that bounced back in trade because they're evaluating what to do with their ice cream business. You have paint companies as well that have bounced back. And also we have snacking companies, Bikaji Food, Pratap Snacks, Gopal Snacks. All of them will be focused after the government slashed the GST rates of namkeen and savoury products. To understand about the impact on all these names, we have Abneesh Roy, Executive Director at Nuvama, who joins in on the show. Hi, Abneesh. Good morning. Always good to see you in, and thanks a lot for joining in. Give us your initial take on this piece of news first, the pullback in GST rate. Any potential impact on these snacking companies?
Yeah, good morning. Thanks for having me. So firstly, on the GST rate cut, frankly, it doesn't really impact Bikaji anything significantly because namkeen was already at 12%. What the government has changed yesterday was essentially in the extruded snacks, puffs, etc., which was at 18%. So for Bikaji, namkeen, it is already at 12%. For ITC, Haldirams, etc., this removes the litigations, etc., provides clarity. So it is good that now the entire savory snacks will be essentially at 12%. So nothing changes for Bikaji, but essentially it reduces the litigations, etc.
So what comes on? Yeah, what comes in this excluded snacks, which will now be taxed at 12% versus 18%? You spoke about puffs. What else? And any impact on other listed players like Gopal Snacks or Pratap Snacks, if you look at it?
So we cover Bikaji in terms of other products. If you see all the extruded products, extended products made from cereals, etc. So it could be puffs, it could be crunchy snacks, it could be the kurkure, those kind of extruded snacks. Essentially, those were at 18%. So I don't think in the listed company there is any big impact. If you see ITC, there could be some impact, but for ITC, the bigger businesses are cigarette and foods, and it's a very diversified company. So I will say not too much of an impact, frankly speaking. It reduces the uncertainty and litigations within the sector. It's a positive step, but I will say that for Bikaji, etc., not anything significant because they are anywhere at 12%. Namkeen was at 12% anyway.
Got that. Abneesh, hi, good morning. Yesterday there was a bit of a move on some of these consumer names, jewellery names. We spoke with the management of Senco yesterday. And they said that, September is turning out to be much better than what they thought. And consequently, Q2 is looking a lot better as well. I'm not sure if that is what lit the fire under most of these names, but they were all higher. Any thoughts on what's going on here and, what names do you like?
So this is as per our expectation. If you see, we have been quite positive on the consumer sector, both staples and discretionary. And if you see, even Unilever has hit life high. We are also seeing momentum coming back in the paint stocks. Coming back to a specific question on jewellery, yes, of course, the government step of cutting down on the custom duty, that has clearly made the footfalls coming back. And we are expecting double-digit kind of a footfall growth for most of the jewellers post that step. And now the marriage season is also picking up. So before that step, if you see, Titan was struggling with mid-single digit kind of SSG, and there was competitive pressure also. But now because the growth has come back to the sector, the marriage demand is also now going to pick up. I will expect that most of the jewelers post that step in the ensuing period should see double-digit sales growth in the jewellery business. So we are positive on Titan. We had upgraded Titan to a buy, and we are happy to see footfalls coming back. In the broader consumer space, staple space, we continue to like companies which have higher rural salience. So HUL, Britannia, Dabur, Imami, Colgate. These will be our top 5 picks. And we also like paints. We expect that paint stocks further headroom for re-rating is there. It has done well in the last 1.5 months, but we see more re-rating potential there.
And from paints, you'll put out a note and will bang on, Abneesh, so congratulations on that. But which is the name that you're most bullish on? If you look at Asian, Kansai, as well as Berger, in the last 1 year, they haven't moved. But as you said, in the last 2 months or so, they have bounced back 8 to 10%. So what's the pecking order?
So we'll prefer Asian and Pidilite the most there. In fact, CNBC, the earlier discussion was on Apple phone, 1/4 of the manufacturing moving to India. Pidilite is doing great work there. They have tied up with Qualtech company of China, which in fact works with some of these players. So I would expect Pidilite to get huge business over the next 5 years in the adhesive, which is used in iPhone, in the EVs also. So that's one company which is expensive, but it is a compounding machine. It keeps looking at these kind of white spaces. In the pure paint space, we like Asian Paints the most. We expect that the operating leverage will come back. But frankly speaking, Asian and Berger have very similar growth metrics. Yes, Berger gained market share in Q1, but it's a more regional player. On a full year basis, we expect Asian and Berger to grow similar. Even in Indigo Paints, if you see the concern on the PE stake sale, that is getting reduced. So I will say even Indigo, in terms of valuation, the comfort is high. So I think the entire paint space will do well. But if you ask for one name, it will be Asian Paints.
Okay. A quick word. PN Gadgir, the IPO opens up today. Have you had a look at the numbers? How does it compare with peers? Have they left money on the table?
I can't comment on that name. We like the broader jewellery space. There is a huge opportunity in terms of organized gaining share and now the custom duty cut. So we like the entire space. We like Titan, which we cover. I can't comment on that.
I have coverage on Goldium, Abneesh? Abneesh, do you have coverage on Goldium, the lab-grown diamond maker?
No, we don't have coverage, but of course that space is seeing huge disruption in two ways. Of course, we have seen lab-grown diamond prices collapse in the last 5 years by 70-80%. That's a concern, and we are seeing a lot of supply there. So what Goldium, I think, is doing is they are going into now branded. So looks interesting, but as it's a late entrant, right? We are seeing even the Titans of the world. They have an acquisition in US. Of course, they have very serious plans on every part of the jewelry. So it's a competitive market. So we will bet on the larger players definitely. But this is a disruptive market, and the lab-grown diamond will be more at the entry level. We expect both lab-grown diamond and the real diamond to coexist. India, real diamond has value. Lab-grown diamond, as I said, last 5 years, 70-80% destruction in value is there. So it will be more at the lower end. We don't see the jewelry demand or the core demand really shifting to lab-grown in the medium term.
Thank you very much for that.